Good morning, and it's a great pleasure again for me, Malcolm Grahamwood, to be here at TIP TV doing my CEO interview. And today it's my great pleasure to introduce Andrew Benitz, who is the CEO of Jersey Oil and Gas. Now, Jersey Oil and Gas is quite a new boy on the scene, but it's excited a lot, and it's also performed extremely well since Andrew took over. So we're going to have a very lively few minutes here, I hope, Andrew. But first of all, for those people who don't know much about Jersey Oil and Gas, would it be a good idea if you just gave us a bit of a run through?
Sure, of course. Well, good morning, Malcolm. Thank you very much for having me on today. Jersey Oil and Gas started 2.5 years ago. As with all great oil companies, it was started by a couple of middle-aged entrepreneurs looking for an oil adventure. And we set out with a very open mandate to look for opportunities as we saw the market was, let's say, on the verge of struggle. And we thought that it was an opportune time to be, let's say, counter-cyclical and look for opportunities as the market was falling away. So our first foray as a private oil and gas company, we started the company in Jersey with the full endorsement of the Jersey government. We seed financed it ourselves, so Ron Lansdell and myself, together with some friends and family. And we set off on a first adventure down to Nouakchott in Mauritania, looked for a gas project down there. Had some very good crayfish, but it was matched together with Fanta Orange, so we thought we'd go to sunnier climes up in Aberdeen. And that's when we saw the beginnings of what we felt was a real opportunity to go into the North Sea. And it was just at the time when the oil price was coming off. The North Sea was under a lot of pressure for cost overruns. Several companies had over-leveraged themselves at high oil prices and was showing signs of struggle. So we thought, let's look at the North Sea. Let's focus on that area, and so that's what Jersey Oil and Gas is. So it was started as an E&P company just to focus on the North Sea.
Good. Well, we'll come back to one too. So your focus on the North Sea, was that because you decided you wanted to be, local or somewhere at home, or did you just filter that out from other international operations? Did you genuinely, as you just said, saw, some prospects coming up?
Well, I think our team that we began to put together had decades of experience within the North Sea. So from a technical perspective, we had very strong experience in the North Sea. We saw it as what it is. It's a basin with 330 producing oil and gas fields. It's a material hydrocarbon basin. And there were a number of things that were helping us make that decision. As the oil price was going down, as the market was suffering from that fallout, the government was introducing new incentives. So taxes were coming down, and subsequently to that, the costs have come down materially. Rig rates, as you'll know, are down substantially. So, you've got lower taxes, lower costs, and now that the oil price is starting to recover, it's a really interesting area to be looking.
So, JOG was formed in order to do deals, and as far as I can see, you've done 3 deals so far.
Yes.
Why don't you talk us through the deals that you've done so far?
Sure, of course. So, when we first began looking in the North Sea, we were negotiating a couple of production deals. And what we found from the vendors, both of them asked us, do you have tax losses in order to make your bid more competitive? And of course, as a private company, we didn't. So we thought, well, let's go and find a company that has some tax losses. And that's when we chanced upon Trap Oil. Trap Oil had $40 million of tax losses. It had suffered through a number of dry exploration wells. And was running out of cash. So we felt that we could help salvage the business. We recapitalized it. We also inherited an exploration portfolio. So that was deal number 1. That was August last year. So we ensured Trap's recapitalization. We changed the name to Jersey Oil and Gas, and so that's why we're on AIM today. But we also inherited a legacy portfolio. And so we've done two transactions with that legacy portfolio. The first was a deal that we announced right at the bottom of the oil price. It was a farm out to Asnor Catalyst for the Homer license, and that was to remove future liabilities to us. So we've got no cost exposure to that license, but we've got a contingent future payment of up to $4 million on the Homer license. So that was deal number one. And then the one that we announced in late August is actually something that we've been working on in the background for ever since we came into Trap. And we saw it, if you look at our offering circular last year, we signalled out the license P2170 as having opportunity because it had two very material prospects. And we did quite a lot of G&G work in the course of last year, and that's really where our spend went towards, was readying ourselves for that farm out. The farm out started in February this year, and subsequently we've announced a very transformational farm out to Statoil.
Now, there's some exciting things to talk about there. I mean, first of all, if you start a farm out process in February, surely you're getting to the stage where people would say, let's talk about it in next February or the February after that. This is quite a quick deal by North Sea and farm out standards in recent years. Yeah. How did you manage to get it done so quickly?
Well, I think I'd also add to it, it's the first promoted farm out in the North Sea in the last 2 or 3 years.
Yeah. So I'm going to come back to promotes in a minute. But yeah.
So why did it move so quickly? I think when we launched the farm out process, we were ready. We had a fantastic data room that had been put together by our technical team, and we found that we only went out to a handful of oil companies, but 4 very materially large companies showed genuine interest.
Right.
So we were very pleased with that reception, and Statoil was truly excited. And the reason why it moved fast, well, Statoil wanted the deal.
Yeah.
And that was simple as that. And I think it comes down to 2 components to the transaction. The Verbier prospect that we found is very material in size, and it's in a light proven oil fairway. So,
the previous management hadn't identified this prospect or found it
out.
Well,
the license had been acquired in the 28th licensing round.
Right.
So that was mid 2014.
Right.
Yeah. So when we actually came into reversed into Trap, it was only 12 months later. Yeah.
Now there isn't just the Verbier prospect on that license, is there? There are a couple of others, one particular one, isn't there?
Yeah, that's right. So there are 2 prospects and 1 lead.
So
we have the Verbier prospect, which is a material 300 million barrel prospect. We have the Cortina prospect, which is over 200 million barrels, and then there's the Maribel lead. I suppose you can guess where
I'm
the
beginning to work out that somebody who enjoyed skiing.
Yeah, our geoscientist certainly likes his passion for skiing.
So that's exciting, and I've looked at the details of the Statoil deal. Yeah. So they carry you for drilling a well or part of drilling a well on Verbier. So what's the timescale on this one?
So the plan is for summer next year. The prospect that's been identified is Verbier as the first target. It remains for formal partner approval, but Statoil are certainly getting their skates on and very much looking forward to drilling it. The Verbier prospect sits sandwiched between the Buchan and Tweedsmuir fields. It's in a proven light oil fairway, and the Verbier prospect itself is an Upper Jurassic target, which is synonymous with many of the oil fields circling.
And there's some wide valuations on what that might mean for Jersey Oil and Gas. I've seen everything from about 50p to about £9 a share. but realistically, there is a way of working out how much you'll get if it's a success.
Yeah.
But
I think the reason why there is a big value gap between where we are today and where we might be on success is because, frankly, this deal is a bit like going into your grandmother's attic and finding a vase and giving it a good polish, and then realising it's a Ming vase.
Right.
Our shareholders are fortunate enough that we're still in the attic, but we've got the endorsement of Statoil, and I think that we, as they are pretty excited about this.
Good. I was going to ask you this later on, but you mentioned shareholders. So who are the big shareholders in Jersey Oil and Gas? Is it you and the management?
So us as management, yes, we are material shareholders. There's another private investor who's our main shareholder, a gentleman called Peter Gillenhammer, who's been very supportive of our overall strategy and supported us through this. Management, we are material shareholders, and I think we've got a vested interest that's very much aligned with all shareholders. Good. There's only 8.5 million shares outstanding, so it's very tightly held right now. But with 8.5 million shares,
I think it's worth watching for the retail. Should keep a close eye on this. Your team, you mentioned earlier on that you're experienced in the North Sea. It reminds me very much of the Longreach Moroccan team in part, but. You guys have got a lot of North Sea experience sitting in there.
It's a good blend of technical and commercial experience. Obviously, I'm a former investment banker, so I bring some commercial experience, but I have been involved in the oil industry all my career. Our technical team is headed by Ron Lansdale, who's our COO, and he previously spent 13 years in Aberdeen with Eni. He also formerly was in Stavanger with Elf. We have our reservoir engineer, Dr. Satinder Purwell, is a former head of European Reserves for Shell. Martin David is our exploration manager, who spent his entire career in the North Sea. Good. Clive Needham was in charge of Eni's non-operated production portfolio. So we've got a really good, wholesome team there.
Tell me, you mentioned earlier on that you want to buy some production, or in order to buy some production, you need to have the tax losses. Yes. And so you've got the tax losses, and you've got some exploration. What's your situation in terms of buying production? Because I'm told it's not that easy at the moment.
Well, that's true. To be frank, there's been a small handful of production deals that have been done in the last 2 years. Yeah. And I think that the reason mainly is because of oil price uncertainty. But I do see that changing. And what we do know for sure is that there is a very strong publicly stated divestment strategy from many of the majors, super majors in the North Sea. And that provides a very interesting platform for companies like us. So yes, we've started early. We've got to understand the market. We've gone through multiple sales processes, evaluated over 40 different production assets. And when I say evaluated, I mean going through vast data rooms, going through commercial bids and negotiating. And I think we are very much on track to be able to add to that side of the portfolio. But we've got to be mindful of what we've pulled out of the hat, which is a pretty transformational deal with Verbier.
So just going back briefly before we wrap up on the funding side of it, when you started, you funded it with friends and family money. At the moment, presumably you haven't got much in the way of cash, but you have got a situation where you're, because of the deal you've done, you're in a position to fund the business. Is there any sort of trend to the funding that you're lining up? Or?
Yeah, absolutely. So going back to the Statoil Farmout, there was some cash element that came into our account earlier this month, and also we're carried for up to $25 million. Our shareholders are also doubly carried because we have a benefit from an existing carry with Siemco or our other partners. So we're very well insulated for Verbier and that particular program. Onto our production-focused strategy, we've built, over the course of the last 18 months, very strong relationships with a major bank who's keen to support us. We have our existing shareholders that are supportive of our strategy. And I do think that the market for public equity is changing. I think funds have been underweight for some time, and they're now re-evaluating opportunities. So I see it as a viable business model to fund. But we're very sensitive with the equity that we've got outstanding to have as maximum exposure to what's a pretty good deal.
It's been great listening to you talking us through the Jersey oil and gas story. We're running out of time, so what I'd like you to do now is to put it all together and give me and the viewers an opportunity to see what your vision is for Jersey, what you see in the maybe the short and medium term, but also what your great plans are for the longer term.
Sure. Well, in the short term, of course, we've got the high-impact Verbier prospect plans to drill next summer. So there's going to be a lot of activity in the lead up to that, which we're very much looking forward to. And I think we've got to sit tight, watch as Statoil performs. And I think that has the potential to add material value to us. Going forward, we do have a very strong ambition to be an opportunistic deal-making company focused on the North Sea, and I think that we have a tremendous opportunity. We've timed it very well. We're at the bottom of the cycle. We benefit from no debt, no baggage. We've got a clean portfolio. We've got some tax losses. So we've got a number of opportunities to build this company. And what do we want to become? Frankly, we want to become the next Paladin or Venture or Dana. And we think that the market is changing so that the North Sea is going to become a very viable basin over the course of the next 5 years to build some material mid-size oil and gas companies. And Jersey Oil and Gas certainly plans to be in that.
Well, Andrew, it sounds very interesting indeed. Thank you very much indeed for being my guest today. Thank you very much for watching. It's been Andrew Benitz, CEO of Jersey Oil and Gas on TIP TV CEO Interviews. Thank you very much.